Let's talk about this problem just a little bit. What's up, everybody? Let's talk about a little problem here that a lot of people have with health insurance in retirement. Let's say you retire before you turn 65 and you need health insurance. Or maybe your spouse retires before you turn age 65 and you were getting your health insurance from your spouse's group health insurance, and now you no longer have that and you can't get Medicare yet. What do you do? Well, everybody knows that once you turn 65 and you get on Medicare, your health insurance costs are probably going to get lower. But before you get on Medicare, you're on your own. So what do you do for health insurance coverage before that magical age of 65? So here are some options. Number one, you could always consider COBRA. If your spouse retires and you're covered under your spouse's group plan, you may qualify for COBRA coverage. It's typically going to last 18 months and it's going to probably be more expensive than the coverage normally is because the employer will no longer be subsidizing the cost of the premium for you. Number two, you could check out your former employer or your spouse's former employer if you're covered under your spouse's group health insurance plan to see if that employer provides retiree health insurance benefits for the retirees that have not gotten onto Medicare yet. This may be a better option for you if it's available, but not a lot of companies do this. If they do this, you might want to check it out because the coverage may be more affordable than COBRA would be, and it may also last longer than 18 months, even up until you turn 65 and can get onto Medicare. Number three, you could work part-time for an employer that provides health insurance benefits for the part-timers. Some companies are willing to do this because they see an opportunity. They see a lot of older, more experienced workers that would make great employees, but that want to slow down from the rat race a little bit and just work part-time. So if you like the idea of working part-time in retirement, at least until age 65, then this may be a good option for you. Number four, you could purchase an individual health insurance policy under the new Obamacare laws. If you have any pre-existing conditions, don't worry because the insurance companies won't ask you any health questions for these type of policies. Remember that you're going to have a time frame that you need to act within. Typically, you have 60 days from losing your group health insurance coverage to apply for an Obamacare compliant insurance policy. If you don't act within that time frame, then you may have to wait until November 15th when the annual open enrollment period begins and you'd go without coverage for a few months. Some of these strategies are going to make more sense than others depending on what your particular situation is. That's all for today, planners. Thanks for watching. I always appreciate it. Listen up, if you're losing your group health insurance coverage because you're retiring before you're age 65, then you probably have another really important event happening, and that's your 401k rollover. You don't want to make any mistakes when it comes to your 401k rollover that could cost you a lot of money and cost you to not be continuing to defer taxes or paying any fees that are unnecessary or any penalties or whatever it is. So to help you out, I put together a 10-point checklist for baby boomers on what they should do before they roll over their 401k. You can get that report by clicking on the right of the screen on the card annotation that will appear. If you're on your smartphone or your iPhone or whatever you call those things, just take your finger right now and press it on the screen. You can press it right on my head if you want to, and you're going to see a little circle with an I appear in the right corner of your screen. Press that little I, you'll see the picture of my 401k book. You can press that picture and it will instantly take you to the page where you can download it for free to help you out to make sure you don't make any mistakes with your 401k rollover. That's all for today, and I will see you next week for some more awesome retirement planning advice.
For many of us, we're in the midst of what's known as open enrollment season, where you pick the health care plan you're going to have for next year, either through an employer or if you're buying a plan on your own or for your small business, you may be buying on one of the healthcare exchanges run by your state or, in many states, run by the federal government for your state. So the plans are sold if you're buying your own, where you buy by color, bronze, silver, gold, or platinum. The higher you go in the metals, the better the coverage you have, the higher the premiums are. But I need to tell you something. One mistake a lot of us do is whoever we already picked, we just pick them again. And that could eat up your wallet, because even though overall healthcare costs around the country are not increasing at any dramatic rate, some of the healthcare plans are going way up in cost while others are going down. So take the time, it'll take you about 20 minutes to reshop your plan on your state exchange and make sure that you're getting the best deal. With employer-provided plans, take the time to look through the options, because before you're done, remember, it's your money and your health. I'm Clark Howard.